And I do want to pick up where Manus left off with that really amazing superlative. And one of the reasons I find that so fascinating is that despite the record deal activity, there's still about $230 billion of unspent cash sitting with private equity firms. Is there just an immense amount of pressure right now to spend that money? Is that why we're seeing this record activity?
Yes, I think that's partly the case. There's been sort of a lot of dry powder around for quite some considerable time, and the number that you've mentioned is very large. Add to that, however, an estimated $100 billion from SPACs that are increasingly targeting the European market as well as the US market, and it is having an impact on valuations.
What's your take on SPACs then? Does this make sense? I mean, you have people who probably otherwise aren't really involved in private equity doing private equity type deals.
Well, in fairness, I think a number of the pioneers of the SPACs, the sort of the TPGs of this world and the larger buyout funds, KKR launched one recently, for example, they do have not only the track record of doing private equity type deals, but know the public equity markets pretty well also, given their track record of successfully listing a large number of their portfolio companies in the past.
If you combine, though, the SPAC picture with the unspent cash trying to get deals done, do you see a lot of your peers in the private equity world, maybe because of this pressure, doing deals and agreeing to terms that in normal circumstances they might not have?
I think that's possibly the case because the volatility and uncertainty that we've got around at the moment as a result of what some people, certainly in the UK market, are calling Brovid, the combination of Brexit and COVID at the same time, means it's very difficult to estimate what the sustainable earnings of a business are. We know what the impact has been through COVID. We don't have a crystal ball to know what 2021 and beyond will look like in terms of the earnings profile of these businesses. So that does make...
But I haven't heard that before. Yeah, well, so what do you do in the meantime, then? How do you make sure that you're not overpaying if you don't know what earnings are going to look like?
Well, you have to look for relative value. You have to look for those situations. Certainly in our case, we're targeting the mid-market. So we're looking to buy businesses in defensible industries that have good growth prospects and where we can use our expertise at the operating level to drive the EBITDA of that business beyond what the current management team believes is possible. And so we're looking for those types of specific opportunities rather than just simply playing the broader market and buying businesses that come available.
What about retail? Because I know you have exposure there. You have, of course, Dreams, the mattress company. You have Scotch and Soda, the clothing company. Is this an area, this retail area, that you still want to be in, that you still want to do more deals in?
No, I think we're starting to pivot away from the two that you've mentioned, both the sort of the retail side and the apparel side. We were very successful in our history in those areas. I think they were clearly challenged during the course of the general financial crisis, and they are disproportionately affected during a period of COVID like this, particularly when we're in lockdown and the retail stores are therefore closed for business. Where we started to look more recently is in, for example, the tech software space. We've just hired Elizabeth de Santagnan in our New York office as a managing director to run that effectively as a new vertical for Sun Capital. And then we're taking the sort of expertise that we've developed and the playbook, if you like, that we've developed in the North American market in healthcare and particularly healthcare services, and looking to use that expertise in the European market.
So that's interesting, not just sort of a pivot away from retail, but more so even a bet on tech. Though, are you able to call this? Are you able to call this, as our anchor Manus Cranny would say, the Greenspan paradigm shift? Is this a shift away from brick and mortar that's going to be permanent after the COVID crisis?
I think bricks and mortar is challenged and has been for some time. There's some large names, the likes of J.Crew and others, who've experienced difficulties for some period of time. Those businesses that have successfully transitioned to a combination of bricks and mortar and e-commerce have managed to ride the storm to a degree. But the only winners will be those with a robust e-commerce platform going forward. I think solely bricks and mortar is sadly sort of something that we'll talk about in terms of history.
Mark, just 30 seconds here, quickly. If tech is next, are valuations too high right now?
I think we've got to continue to deploy capital. That's what's expected of us from our investors. We have to show relative performance. And so we just have to make the best investments that we can in the circumstances. And if that means going slightly higher multiples and seeking, as I said earlier, relative valuation opportunities, then we need to do that. That's our job.
Is there a fear, though, that once the pandemic is over and tech isn't the only game in town, that we will see a correction in prices?
I think we are at a stage where people are looking around, certainly with the arrival of the SPACs, to see whether there is a sort of an overvaluation period ahead of us. But as I said, we have to look sort of specifically at those opportunities that present value and go for them. We can't sort of sit on the sidelines and hope that things will revert back to a lower level in the future. It rarely happens that way.